framework of what I'll be sharing today for about 30 minutes for this program. First of all, I think I'm going to recap about what I shared last week, a recap on the US market to exit or the whole. Then we're going to continue with what we've learned last week about mapping our investment techniques, the strategy, and we're going to see how we're going to apply it to the Singapore market. And of course, with that understanding, we're going to go through a few case study, how we can use that, where we will identify that Singapore market is an income stage and how we're going to use that to manage our investment in Singapore market. And at the end, the conclusion will be Singapore market for 2022. What are the landscape and what are the opportunities? What I'm going to present to you here is not a recommendation. So let's go back to what we've discovered last week, a recap on the US market to exit our whole. And we discuss about the 4 stages in most of the market or stocks. They are income stage, value stage, growth stage, and decline stage. And by the way, I'm not referring that Apple is going to move into the decline stage, and that really depends on how they're going to manage in this growth. Are they up to the trend? Are they are meeting the needs of the growth of the market? So basically, we have discussed about the 4 stages. So by and large, we discussed about the US market. They're entering into a growth stage. We also discussed about there are 3 stages of every growth stage. Now, what are the 3 stages? They are the beginning stage, the maturing stage, and the euphoria stage. So we understand that most of the US market is in this euphoria stage right now. And how to identify the euphoria stage? Basically, we have discussed about the growth is euphoria. That means we compare to the maturity over the last since 2008 to about 2020. You could see that the growth was linear. But once we compare to its own historical past, whenever we see that the growth, the incline is much steeper than the maturity, then we could discern that perhaps this growth is euphoria. Now, we discussed about last week, when the growth is euphoria, what can we do? As a long-term investor, we have to be nimble. So do not be passive, means that do not have the idea that I like a stock, Apple is a good stock, Amazon is a good stock, I want to hold it forever. But be nimble because the times are different. The growth is in the euphoric growth. And I would prefer to a bit more sensitive with the market. I would prefer more on the short term and the mid term for my position in the US market. So this is what I'm doing right now. So since today the topic is about the Singapore market, I just want to demonstrate to you that even for Singapore market or any other market, like what I said earlier, that most market or stock markets, they have these 4 stages: income, value, growth, and decline stage. So what are the strategy for the Singapore market? Now, I'm going to give it to you right now is that Singapore market, by and large, is in its income stage or range stage. Now, how to identify that? So let me just give you a definition about what is an income stage. So I define as is a stable company with stable dividend, not too concerned about market volatility, because in the first place, it's a stable company, right? So now what if those companies do not pay dividends? So I will classify them as a range stage, or rather. So now Top Glove may not be a stable company, but at the point in time, it was a stable company. So over the last 2 years, we have seen the rise and fall of Top Glove. So Top Glove is a company listed in Singapore, rather. So over the last 2 years, we've seen the rise and fall of this company. But before that, there was also a period that you enter into an income or range stage. Just like Apple in the past, they also have a period of range or income stage for the longest time. So is for Amazon and the rest of many of the big companies in the United States. They all go through a similar stages from income to value to growth to decline. So if you got a bit lost what I'm talking about, do go back to revisit my last week's session on the US market 2022. Is it to exit or to hold? Now, so with this understanding here is that the next one I would like to showcase here is one of the blue chip stock in Singapore here called the City Development, that we could see that it is over the last 30 years, since 1990s all the way until the current. Basically, we could see that this stock pays good dividend and is a stable company, but it has been trapped in this range for the longest time, for the last 30 years. That we could see on the range low is about $4. The top side is around $14 to $16. But if I were to invest, which we identified that for this blue chip company right now in Singapore here is at a range stage or income stage, but we got to fine tune a little bit further here. And if I'm going to move into a new season for this company, I will identify that this income stage, perhaps right now, the range is between about $6 to about $13, $14. So right now it's around the range low. So what I will be doing usually for good stable company, income stage, a company where I identify that it is an income stage around the range low, what I do is that I will start to accumulate these companies. So let's go through some case study on an income stage investing strategy. Now, means that if we have identified a particular stocks or market that it falls into the income stage, so how should we manage it? But we're going to go narrow down to the benchmark of Singapore stock, which is STI, represents Straits Times Index. Now we could see that, let me just shift myself down here. Okay, now we could see that over the last 12 years, that STI is very similar to Dow Jones. STI also have 30 stocks that represents the constituents of Straits Times Index. Now, we could see over the last 12 years, basically, it belongs to the income stage. It's kind of trapped, the whole benchmark trapped between the range about 2005 to 3005. That's about 1,000 point range. And the reason we got to ask ourselves is that obviously through this study, we understand that the whole Singapore stock market is trapped in this range between 2005 to 3005. But what could be the reason? There's always a reason behind the behavior. Now, my reasoning is because the whole constituents of Singapore Straits Times Index, it mainly made up of banking stocks, property developer stocks, and telco companies. So now all these are stable company, but I would classify them as an old economy as well. So many investors are frustrated when they invest in Singapore stock. They find that, let's look at this chart here. If you have invested in 2010, say for example at 3,000, and 12 years later, almost 12 years later, is still today at about 3,000. So you'll be frustrated that it's not going anywhere. But later I'll share with you the concept of once you understand that this stock of this market is an income stage, and then it will change the way you manage your investment. So these are called passive investing. Imagine you start investing in 2010 at 3,000, and 10 years or 12 years later, it's still at 3,000 because you're passive, then you will become frustrated. Now, what if a stock or market like Singapore is range bound, it is income stage, but it pays dividend? There's a different way to manage all these stocks here in Singapore, the blue chip stocks, the quality stocks here. Now, let me just give you a story here that was about 3 coming to 4 years on the April 2018. Yeah, I know it's a bit small here, but you could see that STI was at about 3,442. So I was at this a radio show, a financial talk show, and the host asked me about, he's very excited, and there's a lot of market talk that the STI is going to break above 3,005 and head towards perhaps 3,008. So of course the host himself are very excited, and he asked me about my view about Singapore market. So I told him that but if you look back to the timeline of history, we could identify that Singapore indeed STI has trapped in the range between about 2005 to 3005. So I told him that I do not think that it will break so soon or break above so soon. Let's wait and see. Unless it break above and sit on top of 3005, and fundamentally there's some shift, it's to enter into a growth stage, then let's start projecting up. But for the time being, based on what I see here, I think the market is still trapped in the range. Now, let's study about what happened then. So on the day itself or the day after, I came back, I wrote a blog about it, and I posted on my Facebook page as well. Right. So when was April 2018? It was here. And you could see that that was April and that's May. And shortly later, the market entered back into this 1,000 point range, into this income stage again. Now, very interestingly, that you could see that over the timeline, there's 1,000 points up, 1,000 points down, 1,000 points up, 1,000 points down. I just want to bring your attention back here is that we have to understand that the stock or the market that we're investing in, what is their nature? They belongs to the income, value, growth, or decline. For Singapore market is income stage. And then we have to manage this income stocks or benchmark very differently. So I'm going to review it to you very shortly. Now, so what you could see that over the last 12 years, there's in fact about 4 cycles by right now. So since the Lehman crisis, we saw that there's this cycle, and each cycle lasts about between 3 to 4 years. Then we could see the first cycle is about 3 years, second cycle 4 years, and third cycle 4 years, and now we're into the fourth cycle, so halfway mark. And the recent low, it was March last year, 2020. STL was at about 2,200, and the November high is 3,002. That's about 1,000 point range up again. Now, what I'm going to point out to you here is this. Now you recognize that Singapore stock market has this nature that it belongs to an income stage or range stage. Now, how are you going to position Singapore stock market is this. Whenever it's nearing the range low, you try to accumulate stocks. Whenever it's around the range high, you try to start to take profit. Partial profit or all of it, I leave it to you. Now, so if I'm going to add up this 4 cycle, that you could see that from bottom to peak, but of course, I have to have a disclaimer here is that no one were able to buy at the bottom and sell at the top. So I'm just giving you a demonstration here. And for the first cycle was about 114% gain. And second cycle is about 41% gain. And third cycle, 44% gain. And the recent cycle is 47% gain, and it's 1,000 points up again. Now, can you see that? I hope that you find that this is something really interesting that you may never know that, wow, this is with another dimension of how we analyze the market. We have to understand the characteristic of every benchmark, every indices, every economy, and every stock market. Then we got to manage our investment very differently. All right, so what's my conclusion? It's a very short presentation, but I just want to get the point straight across to you. Prepare for the year 2022 for Singapore market. So what, in conclusion, Singapore market 2022, what is the landscape right now, and what are the opportunity in the future? Now is this. I felt that the first session, why I discussed about the US market, that we studied that US market is still on the growing. What we discussed about the reason the US market, why it continued to grow, is because they have the trust and the ability to continue to issue stimulus. Yeah. So as long as they have the ability to do that, I think US market will be all right. But of course, that will lead to another problem, that the problem is the inflation. Yeah. So inflation is caused, in my opinion, inflation is caused by all these stimulus packages. Yeah. Printing of money. And I believe that 2022 inflation is going to pick up even more. The last week meeting, Federal already mentioned that the inflation is no longer transitory. It is inflation is coming. And we got to study very closely for 2022 if inflation, the rate of inflation or the speed of inflation is going to pick up even more compared to 2021. If it's going to pick up even more, definitely interest rate may not just hike 3 times. And that's what Jerome Powell said, right? For 2022, he's targeting and plan to have 3 interest rate hike. But that really depends if interest rate is continuously pumping up. then Fed may have to increase more than 3 times. So of course, we know that interest rate is never a good news for stock market. So there'll be some headwind definitely for 2022. Now, so we study in the US market that the US market is in the euphoria stage. So it's very important that I know when the market is hot, all the investors and traders, our heart are turned towards the US market. But at this point, we also have to understand that do not just focus on the potential upside. As a good investor, we also have to consider what are the potential downside risks. So in terms of the magnitude, in the event that US markets start to turn south, I think the magnitude of moving downwards is much more compared to Singapore. So I'm just doing comparison between, as an investor, between parking my money in US and parking my money in Singapore, who is the greater risk? Yeah. So for today's topic about Singapore market, we studied through that Singapore indeed it is a safe haven in time of uncertainty. So I prefer to gather more of the resources back home here in Singapore and look out for those laggard, especially over the last 2 years, the blue chip stocks that pay good dividends, but they have not really appreciated much. So these are the stocks that I'm really interested in, just to park the money here to collect dividend and perhaps potential capital gain, I hope, in the future. And the strategy is very simple. Number one, you identify at what stage this market is. Today's topic about Singapore stock market. So we identify that Singapore market is in this income or range stage. So income or range stage, it means that around the top of the range, we try to take profit. Around the bottom of the range, over the last 12 years, we study through the 4 cycle. We start to accumulate good shares, not just any other shares, but good productive shares that pay dividends. So now, I always end up with this common question that being asked. These are the questions that usually I receive. You ask me about, will Singapore market ever be exciting? Will Singapore market ever will trade above this range or income stage? Now, what's my proposition here is this. I will not know, but with this mapping technique, I think that will be helpful. And it's helpful to me to track the development in the future for Singapore. Now, in every growing market, I realized that it moved in stages and level. And once it moved to a new level, it provided is continuously growing. Once it moved on to a new stage, it unlikely to go back to the old stage because they've built a strong foundation. That's why I say it has to be, the condition has to be, this economy has to be ever-growing market. And being in Singapore over the last 50 years, coming to 50 years by now, I'm seeing growth decades after decades. Yeah. So now we could see that about 30 years ago in 90s to before around millennium, there was this income stage, the market trapped in this range. Yeah. Then after that move up to a new level, as time passes, Singapore developed, the whole industry developed, it moved to a new level. The former resistance is today's support. So over the last 12 years, we just studied that the support was about 2,500 points. And it kind of trapped in this range. I also give you the reason why. We're at the new income stage, a new level right now for Singapore equity right now. Yeah. Now, so you asked me that, will we ever break away from this range? Now, my answer to you that I do not know, but based on the progression and based on what we discussed in part 1 of this series, that we identified what is income or value stage. Now, value stage, I personally define as it is company or market that are already trading significantly below its fair value, as it is about to enter into its growth stage. Now, it means that this value state, there must be a trigger. So looking at the last 30 years for Singapore market is kind of trapped in this range. At being an island state without any resources, I think we are doing not too bad. But what I see that the something have shifted on the ground, not on the listing of companies. On the ground itself for Singapore, the top 100 tech company in the world, at least 80 of them have set up their headquarters here in Singapore or regional office headquarters in Singapore. Now, I'm seeing something here is that unlikely all these MNC big company will seek listing Singapore market. If they do, I'm happy. But on the ground, that's actually happening. But you have to understand that on the local guys who is vendors of all this MNC, they are serving them as well. I believe that as they come here, now what will set the trend? Why am I on this topic here? Is that what will set a growth? It's very apparent that based on our experience, the growth will have to include technology, e-commerce stock, etc., etc. But Singapore constituents of the listed company, not many of them we see technology stock. We see a lot of good company paying good dividends, but all these are the old economy. But something have shifted on the ground itself, on the marketplace, that the vendors, local vendors, are serving all this MNC high-tech company, where one day I believe that in time to come, all these vendors may seek listing in Singapore. Now, if that happen, then we may enter into a value stage, which is I'm quite excited to present this topic right now, because in time to come, you may disagree with me. It's okay. That's the market. But in time to come, as things develop, this video became an archive. So now, then what will set a growth? Now, value is a trigger point. And what will set a growth? If this trigger point can continue, can sustain, then it may enter into growth. So in a time of uncertainty for 2022, with the virus, with the inflation, with potential interest rate hike, 2022 will be a challenging year. Therefore, seeking for safe haven with greater potential in the future, to me, it is important. Yeah. So that's what I'm seeing for Singapore market. It's not just because I'm living here, but as an investor, I try to not to have a lens. I try to be very objective, and that's what I see. Okay, I hope you are blessed, and do join us for the next session that we're going to discuss about the China market based on the investing mapping strategy. What's my view for the China market? Okay, do follow us next week. And last of all, do follow or like my Facebook page. How do you find them? It's my name, KONHW, two names, yeah, Chinese name joined together. I will read every day. I'll spend about 1 to 2 hours to read news. I'll digest them. I'll inflect upon them, and I also write a summary of the news article I read, and including if I see any market opportunity, I'll post it on my Facebook page. So do like it or follow it. This is an article that I posted on my Facebook page in April 2018. So then I discuss about Singapore market is in this income stage, in this 1,000 point range. Yeah, it may not be a bad thing. So if provided you're not passive. So if you're passive, I hope that today I bring some light to your understanding here that Singapore market, you just have to manage it very, very differently. Do subscribe to my YouTube channel. So what I have presented here today, I will post it on YouTube. And how you can find my YouTube channel is that you go to Invest and Trade with Insight and subscribe and turn on the notification bell. Why? Because my next video posting, so that you'll be notified to our latest video. With that, I just want to thank you so much for staying through over the last 20-30 minutes, and see you very soon. Thank you.